Hello traders, and welcome to a new video on combined market buy versus combined market sell volume. What I'm going to show in today's video is a strategy that you can use for trading just for a few hours, more of a scalper kind of strategy. Now, what we're looking at today is supply and demand, like I've talked about many times, but we're not looking at the kind of supply demand of VCDEP.io where I'm looking at combined limit buy orders and combined limit sell orders, or also known as buy or sell orders that have yet to execute. I'm looking at executed market buy and executed market sell orders, or traders who have already traded. Looking at the aggressive supply and demand, not the passive supply and demand of the market. Now, before we get into that, I'm currently selling my guide to price action and volume called Gravity, link in description. I'm also selling which is on sale, my guide to the order book, order flow, and order depth. That's the one on sale. Currently, link in description below. All right, my pitch is over. Now trading is in. Let's look at this site, cryptometer.io/v2. I'll link this one in the description as well. Now, what this shows, as you can see here, is this is the combined market buy volume of Bitcoin across these 7 exchanges here. And this is the combined market sell volume in the last day of these 7 exchanges here. Now you can see what exactly it shows, last 16 hours. That's here. Now the reason why this is separated is this is BitMEX contract volume. So this is how many BitMEX contracts have been market bought, how many BitMEX contracts have been market sold in the last period here. Now remember, each contract is worth $1 US. So this is 1.37 billion US dollars market bought, and this is 1.2 billion US dollars market sold. Now, how I typically like to look at this tool is to first look for 2 kinds of volume. I want to look for, is this a large amount of volume where I'm actually expecting the market to reverse because there's so much volume transacted, or is this more average or a lower amount of volume? Now, when you see average or even slightly above average or just a lower amount of volume, that's when you typically want to trade with the trend. What I mean by that is if we look for a period such as here where we see more market buying and then we see again more market buying than market selling, because we see 666 Bitcoin market bought in that hour, 6 to 7 UTC, and here we see 1198 Bitcoin market bought from 7 UTC to 8 UTC, and we only see 925 Bitcoin market sold on this hour and only 515 Bitcoin market sold on that hour. When was that? Well, that was right here. That was this candle there and this candle there. This was actually just before price went up 5%. Now, even if you had missed the boat on this, this does look pretty good for market buying. But even if you had missed the boat here, you can see that we had 3,411 Bitcoin market bought on this run up, and we had 2,963 Bitcoin market sold on this run up. If you had bought the close here, price still does go up another 1.5% with a drawdown of only about 0.5%. So that probably would not have triggered your stop loss if you had bought here and just, taken profit when price went higher. Why would you have done that? Well, you can see here that the market buyers are clearly dominant over the market sellers. The bulls are winning over the bears. And it looks like the forces of demand here are stronger than the forces of supply. And that really continues up to here, you can see. There's more market buying than market selling. Now, currently, what do we see, these candles here? Well, interesting enough, we actually saw from 13 o'clock UTC to 14 o'clock and also 14 o'clock UTC to 15 o'clock, we actually had seen more market selling in these 2 candles here. We actually had seen more market selling than market buying there. That was here and here, or let me just show it on here. It was these 2 candles. And if you had noticed that and actually market sold on the close of this candle here around 11,900, you could have had a slight profit, or you would be in profit right now of about 0.5%. With leverage of 10 times, that would be 5% return on your investment, or return on your equity, actually, ROE. You can see that would have worked out potentially nicely. So that's basically how I like to look at this tool. And I found that the best signals actually come from divergence. So what I mean by that is, remember this candle here. Price went down there at 6 o'clock UTC, but we actually saw more market buying than market selling on that candle. So that's actually showing me that even though the market moved down, the buyers are still looking to buy, and it looks like the demand is still pretty high. This would have been a great time to buy. It actually would have been around the bottom, local market bottom here. If you hadn't bought there, well then here would have been potentially okay as well, because you get that. If I look back all the way down, to here, what do we see? Well, let's identify these candles right here, and let me draw my little tool here. You can see dominant market buy volume here and here, and also here and here. But let's just focus on 16 and 17 UTC, 7th of July. 7th of July, 16, 17 UTC. Where was that? Well, that was here at this market bottom. We actually had the market go down, but market go down on 16 UTC, but we actually do see more market buying than market selling. So this would have been a potentially not terrible time to market buy ourselves. And even after the price rises here on this very strong market buying, this would have probably not been a terrible spot to market buy as well. Because you have a max drawdown about, again, 0.5%. Price goes down about 0.5% on that hour, but price goes up about 1.35%, as you can see here. So I found this kind of tool does give some pretty good signals for opening trades. For closing trades, you may want to use a different indicator. Potentially you could use this, but for me, this is more of this tool is more of a way of finding how do I enter with the trend. This is not a kind of tool that's predicting reversals. I found that this kind of tool is more for continuations, hopping into trends so that you're on the right side, and you can, your position can appreciate, your position can make you money. But for actually closing trades, that's, I think, something you may want to use with a different tool. So that's more up to your discretion. But I do find that it's these divergent candles like here and here that I talked about, where you see more market buying on a bearish candle, or you could even see, a candle like, let's say here, you see more market selling. I actually don't know what happened at 1 o'clock UTC. We can go look at that. 1 o'clock UTC, yeah, really nothing. I mean, when you have something like 51% market buy, that's not really going to tell me anything, because there's only, 27 Bitcoin more market bought. It's just really not really saying anything. That was here. So I wouldn't really read into that because it's not really strong enough of a signal. And then this was actually a really good signal here, because at 2 o'clock UTC, you can see that the market does go down, right? But we see more market buying than market selling, as you can see. So this could have been a potentially time to buy, and you get that. So that's really how these 24-hour history volume work, is whenever you see a candle that says something like 15 o'clock UTC, and we scroll down to here, what that's actually doing is it's showing us the volume transacted from 15 o'clock UTC to 16 o'clock UTC, which is here. And once we get this candle to close, this 1 hour candle to close in 32 minutes, what it's going to do is it's going to reveal, once you refresh the page, all market buying and market selling that had occurred from 16 o'clock UTC to 17 o'clock UTC in 31 minutes when the 1 hour candle closes. But before then, you can also use this, as you can see, this and this, just to see the overall market buy and market sell volume transacted. So how do we use this tool in essence? Well, this is a trend following tool, or a trend continuation tool, that you can use. You are going to probably want to use other indicators as well, whether they're order flow or order depth, and looking at limit buy and limit sell orders. That's all up to you, but that could be a good way to pair with this. For me, this can be a scalper strategy, where I'm looking for the dominant bulls or dominant bears, and then I just hop in the trend with them. Stop loss wise, you may want to look for a lower time frame, and then look to place your stop loss based on that lower time frame, because you look at the market structure here, and if you see a good place to place a stop loss based on some market levels, then you place your stop loss there, and you hope that whatever side you hopped in on is more dominant. So that's going to be it for this video. I've actually kept this under 10 minutes, so pretty proud of myself for that. Yeah, go check out this tool. Really helpful site, and if it helps you, all the better. If not, then that's okay as well. With that, happy trading. See you guys soon.